Hi everyone, it's Shauna here from All Things Mortgage. In today's video, we're going to look at how you can avoid paying LMI. LMI stands for Mortgage Lenders Insurance. When you're purchasing a property, if you need to borrow more than 80% of the property's value, then the lender is going to pass on LMI to you. You also need to consider LMI when you're going to refinance. If you're refinancing your property and you do not have 20% equity, then you could be hit with LMI again. Today we're going to look at how property purchasers can avoid paying LMI. The first one is the most straightforward. In this case, you've managed to save a 20% deposit. If you've saved 20%, then you will avoid paying LMI. So if you were to purchase a property for $500,000, you would need to save $100,000, also taking into consideration settlement fees. So settlement fees are things such as conveyancer fees and mortgage application fees. These can run you anywhere from $3,000 to $4,000, so be prepared to have that as a buffer in your savings. Now, saving this much money is no easy feat, and it's difficult for a lot of people, so there are other options. Let's take a look at option 2. Option 2 is called a guarantor loan. In this situation, you approach a family member or family members, such as your parents, to guarantee a portion of your mortgage using equity from their mortgage. Some of the lenders on the panel will also allow this to be guaranteed or held in the form of cash in a term deposit. In this example, the purchase price is $500,000. You've managed to save 10% plus your settlement fees, so you have $54,000 ready to go. Then your family member will secure the additional 10% using equity from their mortgage, bringing you up to that 20%. The drawback is that if you default on your mortgage, then your guarantor will be held responsible for it financially. However, most lenders, when you reach the 20% threshold, will allow the loan to be restructured and release the guarantor. The next option is if you don't feel comfortable approaching your family or you're not in a situation where you can do that, there are some government schemes. The first one is called the First Home Guarantee. This is for people who are entering the property market for the first time. It allows you to purchase a property with a 5% deposit and avoid paying LMI. We have several lenders on the panel who are willing to lend at this threshold. So they will guarantee the additional 15%. There are some stipulations. So you have to be an Australian citizen. This has to be your first home. And your 5% savings have to be genuine savings. So they need to be held in account and they need to be added to regularly so a lender can see that you are saving genuinely. However, if you haven't achieved the 5% savings and you have some savings, some lenders will actually consider your rent as savings. So if you've got 6 months of rental statements that are up to date and on time, that could be taken into consideration as well. But each lender has slightly different criteria, so if you're interested in this loan, come talk to me. The other type is aimed at families. This is for single parents. So if you're a single parent to dependents, you can purchase a property with as little as 2% and avoid paying LMI. The stipulations are slightly different for this. You have to be an Australian citizen, have 2% genuine savings, and meet the lender's criteria. The good thing about the family home guarantee is that you don't have to be entering the property market for the first time. So if you're interested in the single parents family home guarantee, please come and talk to me. And the final thing that you can do to try to avoid paying LMI is to talk to a broker. Brokers are going to have all of the information that you need to be able to understand your loan fully. They'll educate you on all things LMI. If you liked today's video, then please subscribe. Thanks for watching.